So I've been in the workforce for the last 7 or 8 years now, and up until recently I've only ever had to deal with W-2 forms. But last year I think I had to file like 9 different tax forms, and in today's video I just wanted to explain all the different tax forms that I think investors and kind of like lower income people should be aware of. In the last year or two we've had a ton of new retail investors come into the market, most of them being millennials and younger people, and I think a lot of them are not aware of all the different tax forms that come with investing and stuff like that. I've seen a few friends around me in this situation where they dabble in stocks a little bit throughout the year, and then they get an onslaught of tax forms at the end of the year, and then they realize that, oh, they can't file for free anymore on TurboTax. Now they gotta pay for the self-employed one. Now you don't always have to pay for the self-employed one, but any investments at all, you're not gonna be able to use the free one anymore, so sorry. Without further ado, my name is Caleb. Hit that subscribe button down below for more weekly content just like this. Now let's begin. So the first tax form that you need to be aware of, obviously, is going to be the W-2. Now most people are going to have this. This is your typical employer job where you get taxes withheld from your paycheck. This is not to be confused with an independent contractor because most of the time they're not going to have this W-2 form. But a W-2 form basically is going to give you a breakdown of all your taxes and where the taxes are going, and it'll also show if you have a 401k contribution going on with your employer and if you have any money taken out for your medical coverage or dental insurance and things like that. For most people, unless you run a business or do a side gig or freelance work, the W-2 is going to be the most important form of your tax return, and it's also going to be the form that has the most amount of money on it. But if you're someone who doesn't work a W-2 job and you do some independent contractor work, like maybe you're a Uber Eats driver or a DoorDash driver, or you drive for Lyft or something, then you're going to be looking out for a 1099 MISC form or a 1099 NEC form. A 1099 NEC form is basically the exact same thing as a W-2 as far as how you use it to file your taxes. The only thing is it doesn't have taxes taken out typically. So with this one, you're going to have to keep track of all your expenses and deduct certain business expenses as you see fit when you go to file your taxes, but this form pretty much has one number on it, and that's just the amount of money that you made. Now, maybe you were someone last year that didn't work a W-2 job because you were laid off, but you also weren't able to work a independent contractor job for whatever reason. So then in this case, you probably filed for unemployment, and this will be the 1099-G form. A 1099-G form is going to show the total amount of unemployment compensation that you got for the calendar year, and it's also going to show you how much taxes you had taken out of that. So you either had one of two options, at least in my state of Washington, and that was either one, you have no taxes taken out and you have to file those at the end of the year, or you have 10% of the amount taken out as taxes. That way it lessens your tax burden when it comes to filing. So for example, last year, if you made $8,000 in unemployment compensation, then most likely the tax withheld amount is going to be somewhere around the $800 number, but if it's zero, then that pretty much means you need to fish for the $800 out of pocket at the end of the year. But on top of this, the amount of taxes that were taken out, say the $800 example again, this might not be the total amount that you'll actually owe on that. So like in my case, I ended up owing a little bit extra than the amount that it showed in that box. And this is because the tax rate that it shows in that box is 10%, like I said. So if your tax rate for your income bracket is more like 12% or 25% or something, then that 10% amount obviously doesn't cover all that. Now moving on to some of the investor related tax forms here, we got the 1099-B form, the 1099-DIV form, and then we got the 1099-INT form. So the INT form is a form that you'll either get from your bank or you'll get it from the IRS. So if you get it from your bank, that pretty much means that you just have a checking account that has like a good interest rate, and that is showing the amount of money that you got in interest throughout the year, because this does count as income. And then in some cases, you might also get an additional one from the IRS themselves, and this is typically because they didn't pay you enough on your tax return last year. And it's important to file both of these things as income on your tax return, because if you got the form in the mail, that also means the IRS got the form too. Now the 1099 DIV form or DIV form, of course, is for dividends. So this is something that you'll get if you have like an Acorns account or a Robinhood account or any brokerage account really that, pays you dividends. And dividends also count as income too, and you need to pay taxes on this, and this is why you'll get a 1099 DIV form. The only exception to this is if you have a tax diversion account like a 401k or a traditional IRA or a Roth IRA, in which case the dividends, if they're reinvested, you don't need to pay taxes on these until after you retire. The last investment related form I'm going to mention is going to be your 1099-B form. Now this one basically is going to show all of your stock trades and all of your investments broken down, and it's also going to be the form that your crypto trades are on. So if you're someone who needs to file taxes for crypto and stock trading and things like that, the 1099-B form is going to be not only the most complicated form that you have, but also one of the most important ones. A 1099-B form is going to include your cost basis, so how much you spent on the different securities. It's going to include your proceeds, so if you sold anything. It's going to include the date of sale, what it was, what company it was, says. And then it's also going to include this thing called the wash sale rule. And this is basically showing the amount of losses that you had that aren't actually tax deductible. So normally when you lose money on a stock and then you make money on another stock, you can use that loss to actually offset the gains from the winning stock. However, if the stock that you sold, if you buy the same one or a similar stock back within the next 30 days, then you can't actually use that loss as a deduction against your gains. The wash sale rule is kind of hard to explain, but it's basically to deter investors from selling a bunch of stuff at a loss right before the end of the year just to buy it back in January. That way they get extra tax write-offs when they didn't actually deserve it. Unless you're someone who's a stock trader and makes a bunch of trades on a daily basis, I would not worry about the wash sale rule whatsoever, but it's just something to be aware of. Okay, just kidding. I actually had one more tax form here related to investing, and that is the 1099-R form. And this is basically your tax form for your distributions from your retirement accounts. So if you're someone who has a 401k or a traditional IRA or a Roth IRA or one of those types of accounts, and you withdraw any money from these throughout the year as distributions, then you will probably get a 1099-R form, and that is just showing the amount that you took out and whether or not you'll owe taxes on that. Now, the last two forms I wanted to mention are the 1099 MISC form. Now, I mentioned this a second ago with the DoorDash and the Uber Eats thing, but this form is also used for other stuff. So right here on my laptop, it says you can also use this form for royalty income or prize money or awards and rental property income. So if you're someone who has real estate and you rent out one of your properties to someone, you'll probably have a 1099 MISC form. Or maybe you're someone who, makes music online or are a YouTuber like me and you get money from, your ad revenue or your streaming and stuff like that. Or maybe you won an award for a contest or something. Then you would report that on your 1099 MISC form. The MISC form is basically to cover all your other types of income that don't fall into any of the other categories. And the very last form I wanted to mention, it's kind of a wild card and doesn't fit into any of these categories, and it might not even apply to the majority of people watching this video, but it is the 1095A form. And this is basically a form for when you get a tax credit for your health insurance. So if you're someone who's in a lower tax or income bracket and you typically need help from the government to help pay for your health coverage and your medical expenses, then you'll be looking for the advanced premium tax credit, and that will be reflected on this 1095A form. Medical coverage is like through the roof these days. It's like $300 or $400 for a single person, even if your income is super low. So basically what this tax credit does is they will give you a tax credit at the end of the year to help offset your medical expenses. So say that you pay $350 a month for your health coverage, but then they give you a tax credit of $250 every month. And so that'll make it to where you either get all that money back at the end of the year to where you're only paying a net of $100 per month, or they'll actually apply it directly to your medical bill. So for example, if you get that $250 a month, you can either apply it directly to the bill where you only have to pay $100 a month, or you can pay the full price of $350 a month, and then you'll get that $250 times 12 months at the end of the year added to your actual tax return. And on top of this, even if you just have the tax credit applied to your bill directly, even if you, over-reported your income and they actually didn't give you as much as you qualified for, then when you file your taxes, it'll account for all that, and you'll actually get more back sometimes for the tax credits you didn't use. Now, I know doing taxes can be really overwhelming, but I promise you, if you just take a little bit of time to educate yourself on some of these different tax forms and what they mean and what all the different boxes are, I think it'll get a lot easier over time, and this is a huge part of adulting that a lot of people never see coming. It's all fine and gravy when it's super simple and you just have one or two W-2 forms, but as soon as you start investing, you get, the 1099B and the MISC and the DIV and the INT forms, and there's just so many to keep track of. So I hope this video was helpful to you, and if you want to learn more about some other tax rules that are going on, be sure and check out this video right up here about the new Venmo taxes released for 2022. With that being said, thank you so much for watching, and I'll catch you in the next one.